Right. So good evening. Today I thought of discussing MCQ past paper questions from the partnership accounts. Okay, so I have sent this paper. I've taken questions from 2016, 17. So without taking much time, let's start with question number 1. If you all have any doubts, anything that you all want to explain, please use the chat box. I hope you all can hear. So we will start with question number 1, which is 2018 A-level paper. So in 2018, there were actually 4 questions, right? Question number 14, 15, right? We had question number 14, 15, and question number 40 and 41. So we will start with question number 14 and 15, which is from 2018 A-level paper. Right. So let me read the question. Use the following information to answer question number 14 and 15. The following information relates to Nalinda and Shanta partnership. Balance as at 31st March 2017, Nalinda, Shanta. Capital accounts and current accounts. On 1st of April 2017, Nalinda provided 200,000 as additional capital. So it is an additional capital. 1st of April 2017. Right? Year end is 31st March 2018. So this is provided at the beginning of the year. Shanta provided 500,000 as loan in cash to the partnership. 500,000 loan. The annual interest rate of this loan is 5% and is credited to the current account of Shanta. So that means already the loan interest has been calculated. Profit and loss are shared between Nalinda and Shanta in the ratio of 3:2 respectively. And they are entitled to an annual interest rate of 10% on the closing balance of capital accounts. So after the additional capital, we have to take the closing capital balance. For that amount, 10% interest should be paid. The profit of the partnership, 500,000. During the year, Nalinda and Shanta have drawn 100,000 and 50,000 respectively from the partnership. There were no any other cash withdrawals by the partners. The equity of the partnership. So what is meant by equity of the partnership? Equity of the partnership means capital account balance and the current account balance. Net cash received from the transactions with partners and Shanta's current account balance. Okay, so we need to prepare a current account and the appropriation account. So if needed, we can prepare a capital account as well. Right, so I want you all to draw capital account, current account, and the profit and loss appropriation account. there is a question, what is meant by net cash? Net cash means cash received minus cash payment. The amount received from the partners and the amount paid to the partners. We will calculate. So we need a capital account, current account. Actually, capital account is not required. Yeah, capital account is required because they ask for the equity. So prepare a capital account, current account, and the profit and loss appropriation account. So you will definitely get a few questions from the partnership accounts in MCQ as well as in the second paper. Right, so we are doing 2018 A-level MCQ question number 14 and 15. Then first record the capital account balance and the current account balance as at 31st March 2017 means 1st of April 2017. That's the opening balance. Opening balance. Capital account, Nalinder 800, Shanta 500. Current account 200. There is a note. So what is equity of partnership? Equity of partnership is capital account, balance, and current account. So that is equity of partnership. Equity of partnership means the capital account balance and current account balance. Right. So record the opening balance. And also they have given the profit of the partnership for the year ending 31st March 2018 is 500,000. So we will record 500,000 as the net profit of the partnership. This is after the interest payment, after the interest on loan. The net profit is 500,000. Can you all tell me the answer for question number 14? I'll give you a few minutes. At least few of you all can tell me the answer, then I will explain the calculations. We have recorded the opening balance, capital account, current account, and the net profit. There is additional capital, interest on loan, year end is 31st March 2018. Yes. If you have any doubts, please let me know. Why opening is in credit? Normally, the capital account, current account balances are credit balances. Not, if they have not mentioned, we have to take as credit. Capital is credit. The capital and current balances, current account balances are credit. Okay. So when we do the double entry principle, when we start double entry principle, there we learn income, capital, and the liabilities have credit balances. Expenses and assets will have debit balances. So that is why the opening balances of capital and current account we have taken as a credit balance. Current account is also a part of capital. Now in a partnership, the amount belongs to the partners. We divide capital and current. Capital account means where we will record the capital investment, capital withdrawals, goodwill and revaluation in the capital account. In the capital account, we will record investment of capital, withdrawal of capital, goodwill and revaluation mainly. Right? In current account, we record all the current or their annual transactions, interest on capital, interest on current account, interest on drawings, partner salaries, share of profits, and also the day-to-day their transactions like drawings, okay, interest on loan. And there's another question. Loan account is credit. Yes. Loan account is a liability account. So what is the answer for question number 14 and 15? Right. So let me explain the transactions. 1st of April 2017, Nalinda provided 200,000 as additional capital. So capital will increase for Nalinda 200,000. It's an additional capital. Shant provided 500,000 as a loan in cash to the partnership. So this goes to the loan account. It doesn't go, we don't record the loan in the capital or current account. We record this in the loan account. in loan account there is a balance of this amount. $500,000. Okay. So remember, we don't record the loan amount in capital or current account. Then what we have is annual interest rate of this loan 5%, and it is credited to the current account. So we have to credit the current account interest on loan. It's 5%. So if we calculate 5% from 500, 5% is 10% is 50, 5% is 25. It is Shanta's loan. So it will be credited to the current account of Shanta, 25,000. 25,000 interest on loan. Then they have said profit and losses are shared between Nalinda and Shanta in the ratio of 3:2 respectively. That is to share the final profit. And they are entitled to an annual interest rate of 10% on the closing balance of capital account. So since there are no other transactions, we will find out the closing balance of the capital account. Its side is more 1,500. Right. So capital balance is 1,500,000. So we will find out the interest from capital. Nalinda will be getting 1,000 into 10%, which is 100. And Shanta will be getting 10% from 500. So that is 50. Shanta is getting 50,000 as the interest on capital. So that will be debited to the appropriation account, and we have to credit current account interest on capital 150. Total it's 150. Total 150. Then they have given during the year Nalinda and Shant have drawn 100,000 and 50,000 respectively from the partnership. So this is drawings 150. Interest rate 5% for the loan, 10% for the interest on capital. Don't get confused. 5% is for the loan, 10% is for the capital. Okay, so that's all we have. Then we will find out the remaining share of profit, which is 350. So Nalinda will be getting the profit sharing ratio is 3:2. So we will get 3/5. 3/5. And Shanta will be getting 350 into 2/5. So 350 into 3/5 is 210. 350 into 2/5 is 140. So that's the final share of profits. 210, 140. 210 and 140. Then we can calculate the closing balances of the current account. So both credit balance is more. So we can take the same amount to the debit side and calculate the closing balance. 510 minus 100. So it is 410 and 265. That's the balance brought forward. Closing balances. So closing balance of the capital 1,500,000. Closing balance of current account 410 and 265. So the question is, what is the equity of the partnership? So equity means capital account balance and current account balance. Capital account, we have 1,500,000. So total 1,500,000. 1.5 million. Current account balance 410 plus 265 is 675. So total 2175. Capital account balance plus current account balance. Capital account balance is 1.5 million. Current account balance is 675. So total is 2,175. This is the answer for question number 14 in 2018 paper. And the next question is, what is the net cash received? And Shanta's current account balance. So Shanta's current account balance we have already calculated. It's 265. Now we need to find out the net cash received from the transactions with partners. So what are the cash transactions? There is a additional capital. Additional capital of 200,000. And there is a loan received from the partner Shanta 500,000. Then there are drawings. Drawings from Nalinda and Shanta. 100 from Nalinda, 50 Shanta. And what is the net cash withdrawal, cash received? 550. So that's the net cash received. 550. So the answer for question number 15 is 550 and 265. Any questions? Is it clear for everyone? Right. So 2018 question paper, question number 14 and 15. So cash payments only we have taken here. Net cash received means all the cash receipts and cash payments related to partners. Interest on loan, interest on capital, these are payables. How do you pay this? Through drawings. Okay. So we take only cash transaction. Drawings means this is cash. So cash transaction, this, and this. There are 3 cash transactions. Any questions? Right. Then we are moving to the second question in the paper. Question number 40 and 41. So we will do question number 40 in 2018 paper. The following information has been extracted from the profit and loss appropriation account of Anura and Bimal partnership for the year ending 31st March 2018. %5 interest on capital and the profit share. This account has been prepared by trainee accounts clerk without considering the partnership agreement. However, these amounts have been posted to the partner's current accounts. As per the partnership, profit and losses should be shared between Anura and Bimal in the ratio of 3:2 respectively. There is no provision in the agreement as to interest on capital. Write the journal entry to rectify the current account balance of the partners. So here what happened is the trainee account clerk, he has given the net profit by paying 5% interest on capital. Right? He has paid interest on capital A Anura 5,000 and Bimal 20,000. And also he has paid the profit share 20,000 for Anura and 10,000 for Bimal. So total 25,000 and 30,000. Right? And what we can do is I'll take this recorder. Right. Actually, there is no interest on capital. And also the profit sharing ratio is also 3:2. Right? How much is the total profit? Total profit will be now interest on capital 25,000 and the profit share is 30,000. So total profit is 55,000. Total profit is 55,000. Right. So what should be the correct double entry, correct share of profits? Recorded amounts. Correct. I'll take recorded profit share and correct profit share. Correct profit share should be 3:2. So total profit is 55,000. Now profit is calculated. If it is not clear, interest is paid 25,000. Profit share is 30,000. So total profit is 55,000. So you can't give the profit as interest on capital and 2:1 profit share. There is no interest on capital. This should be given 3:2. 3:2. So this 55,000 we have to give A and B 3:2. So 3:2 means 55,000 into 3/5 is 33,000. 55,000 into 2/5 is 22,000. So this is how you have to divide the profit. So if you take the previous recorded, the total credited to each partner is 25,000 and 30,000. Right? So actually it should be 33,000 and 22,000. Therefore the difference, so you can see the difference, $8,000 and minus 8,000. So that means for A, we need to increase credit another 8,000. We need to credit 8,000 to A and debit 8,000 to B. Right? So the double entry, the correction entry should be double entry, capital account, B is debit 8,000. We have to deduct from B because credited 30,000, actually it should be 22,000. Therefore, we have to deduct 8,000 from B and credit 8,000 to A. Capital account, A will be credited 8,000. There are some questions. Sorry, not the capital account, current account. Sorry. My mistake. Put the capital account is current account. So there are some doubts. How to get the correct profit share? Correct profit share is given 3:2 respectively. 3:2. And so once you calculate the share of total profit before they give the interest and profit share, before they give these two, net profit is 55,000. So that 55,000 should be shared among the partners 3:2. So 55,000 into 3/5 is 33,000. 2/5 is 22,000. 2/5. Right. So actually interest on capital, you can't give interest on capital. And this is the recorded. Now if 8,000 comes by taking the difference between this and this. 25,000 was recorded, but actually you have to record 33,000. For A, current account of A should be credited 8,000 more, and current account of B should be debited 8,000. Right, so any other doubts in this question? Is everything clear? Right. So let's move to the next question in 2018 paper. Right. So this is question number 41. Shanta and Yasit are partners in a business. They share profits and losses in the ratio of 3:2 respectively. On 1st of April 2017, Dayan was admitted as a partner and capital balances of Shanta and Yasit on this date were 1,000,000 and 750,000 respectively. So we can record capital account opening balance 1,000,000 and 750,000 for Shanta and Yasit. So all profit sharing ratio. This is profit sharing ratio. Three is to two. The new profit sharing ratio is 2:2:1 with Shanta, Yasit and Daya. New profit and loss sharing ratio 2:2:1. On this date, the goodwill of the partnership was estimated as 3 million. Further, it was decided not to maintain a goodwill account, but to adjust it through the partner's capital account. So, if you are adjusting the goodwill through the capital account, right, the double entry will be debit the capital account with the new profit sharing ratio and credit the capital account with the old profit sharing ratio. Right? So new ratio, we have 3 partners. S, Y, and D. Whole ratio S and Y. Total goodwill is 3 million. So old ratio we have to give 3 million is 3,000 into 3 over 5. 3 over 5 and 3 million into 2 over 5. 1,800 and 1,200 we have to credit the goodwill. Old profit sharing ratio we have to credit 1,800 and 1,200. New ratio we have to debit. New ratio is 2:2:1. So 3,000 into 2 over 5. 2 over 5 and 1 over 5, which is 600. Goodwill, new profit sharing ratio we have to debit 1,200, 1,200, 600. Old ratio credit, new ratio debit. Then if you calculate the closing balance, total credit they ask only S and Y. $1,600 and $750. TSR is profit sharing ratio. Okay, so answer Shanta 1,600, 1.6 million. They ask for rupees, so you have to write 1,600,000. And Yasit 750,000. So that's the capital account balance after adjusting the goodwill. Old ratio credit. Now in most of the question, almost all the questions, the double entry for the goodwill will be this. So don't forget this. old ratio credit, new ratio debit. So if it is a new admission, there will be two partners credited. If it is a retirement, most of the times three partners accounts will be credited, two partners account will be debited. So next question number, this is 2017. So let me know if you all have any questions. Okay. So we are moving to 2017 paper. Question number 13 and 14. Right. So let's start this question. Use the following information to answer question number 13 and 14. Amal and Kamal carried out a partnership sharing profits and losses in the ratio of 2:1. And Vimal was admitted as a partner on 1st of April 2016. So quickly see when is the year end. Year end is 31st March 2017. So this is at the beginning, right? Vimal is joining the partnership at the beginning of the year. He invested 500,000 as capital. The goodwill estimated on this date was adjusted through the partner's capital account. A goodwill account is not maintained in the books. In terms of the partnership agreement of Amal, Kamal and Vimal are as follows. Profits and losses shared 3:2:1. Kamal is entitled to an annual salary of 360,000. The following information is also provided. Capital account, opening balance and the closing balance, 2016 and 17. Current account, 2016 and 2017 for all the three partners. Amal and Kamal have not provided additional capital during the year. The drawings of partners for the year ending 31st March 2017, Amal 210, Kamal 200,000 and Vimal 70,000. They have been adjusted to the current account. So they ask us to calculate the goodwill estimated on 1st of April and the equity of the partnership. And the second part is the profit of the partnership and the total profit distributed to Kamal. So to do this, we need to prepare a current account and a capital account. So here they have not given the net profit. We need to find out the net profit and also the goodwill. So we have to draw current account and capital account. Capital account and current. AKW. And profit sharing ratio is given. Old ratio is 2:1. New ratio is 3:2:1. So let's record opening closing balances in the capital current account. First, I will record these balances. First step. Capital account, opening balance. $2 million and $1 million. No balance for Bima. Closing balance 2.2 million, 1,300,000. Closing balance. Current account credit balances. Opening 500 and 300. Closing 650, 700 and 50. Recording the opening balance. This is, we have to do like incomplete records. And whatever the information we have, we will record it. And other balances we need to find out from taking the difference. Then we have investment by Bima. 500,000 we have to credit back to the capital account cash. 500,000 invested by Bima. So no additional capital. No additional capital. Then there is a goodwill adjustment. Goodwill, what we do is all profit sharing ratio will be credited. And new profit sharing ratio we will debit. Like we did in the previous ratio. Okay. So old ratio we don't give for W or Vimal. New ratio we will deduct from Vimal. So we can find out from the capital account, we can find out the goodwill portion of Vimal. That is the difference between credit and debit of Vimal. So it is very simple. 200,000 is the goodwill portion of Vimal. Goodwill portion of Vimal is 200,000. So what is the share of Vimal? It is 1/5. 1/5. Right? So goodwill 1/5 is equals to 200,000. Therefore, total goodwill will be 200,000 into 5, which is 1 million. So total goodwill will be 1 million. Then the double entry for the goodwill, old ratio credit, so 1 million will be credited 2:1. Sorry, it should be, sorry, it's not 1/5. It is, total is 6, 1/6. So 200,000 into 6. 6 is 1.2 million. So 1.2 million, we have to credit old ratio and debit new ratio. 1,200 into 2/3 is 800, and 1/3 is 400. So that is the credit entry for goodwill. Credit old ratio. And we have to debit the new ratio, which is 3:2:1. 1,200 into 3/6 means 600. 1,200 into 2/6 is 400, and 1/6 is 200. So that's how we record the goodwill in the capital account. So if you calculate the total, it is getting balanced. So goodwill of the business is 1,200. Then they ask for the equity. Equity means, as I said earlier, capital account balance and the current account balance. So capital account balance is the total of 2,200 is total. Current account balance is this. And this is 750 plus 650. 1,400. Capital balance 2,200 plus 1,000 plus 300, which is 3,500. So total is 4,900. So answer is 5. So that's about the capital account and the goodwill. Then we have to calculate the profit of the partnership and the total profit distributed to come out. So for that, we need to prepare the current account. The transactions related to the current account is given in the question. Kamal is entitled to annual salary of 360. So we will pay salary. Kamal 360 only to Kamal. Then nothing else. Drawings is given. The drawings of the partners, Kamal 210, Kamal 200, Vimal 70. Adjusted through current account. 210, 200, 70. Right? Then we need to find out the difference. Now there will be share of profits. So this is the amount we need to find. Difference in the current account is share of profits. Okay, so credit side is 860. Difference. $360, $240, and $120. So the total profit will be salary plus share of profits. So that's the total profit. Salary plus share of profit is total 1,080. This total. So this is what you take from profit and loss appropriation account, which is equals to 1,080. And total profit distributed to Kamal is 360 plus 240. We have given 360 plus 240. Total is 600. The profit distribution to Kamal is 600. So when they ask total profit distributed, we have to take interest on capital, interest on current account, salary, share of profits, everything. So the answer for 14 is answer number 5. Any doubts? Is it clear? Is it clear? Okay, so we move to the next question. Okay, so next. (2017) question number 40 and 41. Theory parts. State two situations in which the goodwill of partnership is estimated. Can you all tell me the answer? When are you going to do the goodwill calculation, goodwill adjustment? Yes, it's admission of a partner, retirement of a partner, or if there is a change in the profit sharing ratio. Right? So you can write admission of a new partner, retirement of an old partner, or a change in profit sharing ratio. So those are the situations we adjust the goodwill. Then the next question. State whether the following statements are true or false. A. The goodwill of partnership estimated when there is a change in the profitability. True or false? What is the answer? The goodwill of the partnership estimated when there is a change in its profitability. Change in its profitability is wrong. Change in profit sharing ratio is correct. Profitability anyway, it will change. Every year the profitability will change. Number 2. According to the Companies Act, partnership can have a maximum of 20 partners. Yes, that's true. According to the Companies Act, it says if the partnership number count is more than 20, they have to register that as a company. That is true. A partnership cannot exist without a written agreement. True or false? False. We can have oral agreement or implied agreement other than written. That is false. Section 24 of the Partnership Ordinance 1890 requires interest of 5% to be paid on partners' capital balances. No, it is also false. Capital balances, no interest. So only second one is correct. Only B is correct. Everything else wrong. Okay. Next, question number 5. This is also 2016. Which of the following statement is correct in relation to partnership? What is the answer? The equity of the partnership is represented by total of capital and current account balances of the partners and other reserves if available. So actually that is correct. Equity of the partnership means capital account balance, current account balance, and if there is any reserves, we have to take that. A partner is entitled to salary only when service is provided. That is wrong. The profits and losses are distributed among the partners in proportion to their capital contribution. No. According to the partnership ordinance, it says profit and loss should be distributed equally. Goodwill estimated only on admission or retirement. No. If the profit share is changing, we can adjust the goodwill. A partner can be admitted or retired only on the first day or last day of financial year. No. Even in the middle, there can be an admission or retirement. So answer is number 1, 2016. Right. So then we have the last question, 2016, question number 39 and 40. So in this, let me read the question. This is also another very important question. Okay. Shakti, Kalpa and Pawan carried out a partnership sharing profits and losses in the ratio of 5:3:2 respectively. On 31st March 2016, Pawan retired from the partnership, and on this date, the goodwill was estimated as 1 million. It is the policy of the partnership not to maintain a goodwill account in the books. Shakti and Kalpa continued the partnership sharing profits and losses equally. The summary of the transaction recorded in the current account of the partners as follows. Three partners: profit share, salary, interest on capital, drawings, salaries paid. The journal entry to adjust the goodwill in the capital account. Calculate the following: profit of the partnership, total profit appropriation to Shakti and Pawan. So we can do the appropriation account. So I'll explain through appropriation account. Journal entry to goodwill is very simple. What's the double entry for the goodwill? It is credit old ratio, debit new ratio. So initially there are three partners, S, K, and P. Old ratio credit. Pawan is retiring, so only this 10K will be in the partnership. Credit. Goodwill is 1 million. Let me take the profit share. Shakti, Kalpa, and Mohan. Old ratio 5:3:2. New ratio, continue the partnership sharing profits and losses equally. Okay. So credit 1 million divided by 10 into 5. So 500, 300, and 200. New ratio is equal 500 and 500. So this is the double entry for the goodwill. Double entry for the goodwill. New ratio debit, old ratio credit. Then the next question is calculate the following. Profit of the partnership. Now since they have given how they have distributed the profit, we can calculate the net profit of the business. So I'm preparing a profit and loss appropriation account, or you can just have a statement. I'll explain both methods. S, K, P. Profit share is 500, 300, and 200. And they have given salaries S, K, P. 400, 400, 400. Interest on capital S, K, P. 300, 200, and 100. Drawings and salaries paid won't come. So here net profit. Net profit is addition of all these, which is 2,800. Net profit is 2,800. You take the total interest on capital, total salaries, and total share of profits. It will give you the net profit. Then there's the total profit appropriated to Shakti and Pawan. have given, actually the interest on capital is given salaries and share of profits given to the partners. So I'm preparing this entire thing because sometimes they might ask different question. Maybe if they ask calculate the closing balance, so you can do this. Drawings will come here. Which side? Shakti 40 and 20. Salaries paid also will come here. They are not given the opening balance. Total profit appropriated to Shakti and Pawan. So Shakti, the total is 1200. This total 300, 400 plus 500. And Pawan is this total 100, 400 and 200, which is 700. These two totals. So it's 1200 and 700. Okay, so that's how we do it. So any other questions? So we were able to discuss few MCQ questions. Later, if we have time, I will discuss more questions related to this. Okay, so tomorrow we will be discussing grade 13 syllabus. And tomorrow at 7 p.m. we have our normal revision class. In that, I will discuss grade 13. We are starting with accounting standards. Okay. Sure. Any other doubts? So if there is no questions, we'll conclude the session today.